Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the markets. We had an absolute dump of a day here, a bit of a flash crash going on, and it's still going on after hours right now. Bears in control. SPY is down in the 260s after closing, almost at 264. So a lot of weakness still continuing. The hourly RSI for SPY at this point is down at 11. So where we stand, again, it's the tale of two time frames. On the shorter term time frames, this is absolutely ugly and the house is on fire kind of deal. But if you zoom out to the weekly time frame, it's no big deal for the longer term trend. It's just the speed at which it's pulling back is what has everybody scared. So I am absolutely, and before I go into this, definitely want to point out that I don't have many long-term positions at all. I am vast majority cash, and that is because I'm always on the computer and I'm always agile and moving my funds around. So I don't have long-term positions that are exposed right now. So a day like today is really no biggie for me whatsoever. So that's where I'm coming from. Just want to get that out of the way. But we closed week. We have 2 gap downs in a row in terms of opens. 3 gap downs is a bullish reversal pattern. It shows that the bears are extending themselves to the downside, which obviously in this instance is even more so magnified. So we're looking at the potential for a gap down open. Next support I'm looking at is 259.43 on the daily chart from consolidation. We're going to be looking for a volume climax to indicate the temporary bottom. I'm going to be looking for common shares of SPXL. SPXL is a 3 times leveraged ETF of SPY. I am much more comfortable in common shares than I am options. I do trade options. I traded UVXY puts today from the original climax dump low, and those went up, 140% in 10 minutes. And they were extremely volatile. But when things get this crazy, the bid and the ask of the options are really all over the place. And I'm just more comfortable. The risk to reward is smaller with these common shares, but that's where I'm more comfortable. So I'll use more capital in a more comfortable space for me to make up and try and see some big gains. So I am absolutely scouting SPXL tomorrow for an entry. And again, just being cautious, because we know where the ideal scenario is to put yourself in a position where you can get a stop loss at break even or a small loss. And if it triggers, you're out of the trade and to just keep looking and the bounce will come eventually. We know we're going to have a very solid bounce from the temporary bottom, wherever that is. The daily RSI on SPY has gone from overbought, extremely overbought, to oversold in 6 days. So, VIX and UVXY, I'll look at those in just a moment as well. But it's really the climax is near, and we are going to be looking for a very significant bounce. And just a rough target, SPXL, let's say we get a gap down open, I would very easily look for a 10% bounce from 40 to 44. And again, that's just requiring that the market sees 3.33% bounce, as this is a 3 times leveraged ETF bull. So I'm personally not holding anything overnight. I really like control, and when I'm overnight on conditions like this, it's really a little bit more gambling than I want. I want to be, sitting at the computer. I want to have my stop levels set, and I want to be watching things very closely. So again, SPXL has all of my attention tomorrow, and UVXY and VIX puts will be a good play as well, or shorts. So weekly time frame for perspective, the middle Bollinger Band is trying to hold this week. Long way to go. We got 4 days left to go. We could see a lower wick and bulls bouncing off this level. The last consolidation low touched it and held it as support in August. So again, just perspective, this weekly chart is all bull still. So obviously we pulled back very significantly, and we gave back 2 months of bullish action in just 2 weeks of pullback. But we will establish a support level on this weekly time frame. It's just a question of where. And then from there, we will look for an equilibrium pattern where we bounce and set a lower high. And then from there, we'll look for the range to tighten up. If we break bearish from the equilibrium pattern, that tells us that we have a significant amount in terms of time in consolidation left to go. But again, the magnitude of this pullback, we are looking bullish, but doing it in a very contained way where we have stop losses in place, and we're not going to lose our shirts by making this bet. The Dow is dumping, so big time pullback. And in this instance, we gave back 2 months of bullish action in about 2 days. Support is down here at 23,921. We are bouncing off of 23,923 so far. If we see the gap down open, the next support, there's a couple gaps that are going to get filled. The next support is 23,507. So the Dow is seeing a huge dump. The weekly time frame, though, middle Bollinger Band currently holding. You know, look at how many supports were established on the way up on this stretch that we just gave back. Not much at all. The last clear support is established down here at 23,242, and we're still well above that level. So again, 2 gap downs, a third gap down. It's actually only 1 gap down on the Dow. And what's worth pointing out is the gap filled. The bulls showed up this morning. The gap filled by 8 cents on SPY, and the gap on the Dow just filled, and then the bears took back over. That was definitely looks like a market maker signal where it said, all right, bulls are done for now, bears are taking back over, and then we had that all-out dump. So checking in on IWM, all-out dump here as well, closing near the low of the day. The next support on the daily is down at 143.95. IWM on the weekly, losing the middle Bollinger Band and taking out a couple support levels. The key support level is 143.95 for IWM. But just out of comfortability, for me, I'm trading what I said, SPXL, likely tomorrow. So let's look at VIX and let's look at UVXY because these names, 87% day on the volatility index, which is the highest ever. So huge follow through. Congrats to the bulls. We're very overbought. I mean, look at the RSI in the 90. It's not going to stay up here for long. So again, this is why I'm looking in the opposing direction. Puts, like I said, that bounce on SPY puts win 150% in 10 minutes. So the opportunity is here. This is the volatility the traders are looking for. And with a close of the high of the day for VIX, if we see a gap up open, the weekly, we have to zoom out to find some weekly resistance. Need to zoom out multiple years. And looking at the last weekly resistance, it's back here. And we had a member draw a trend line. Not going to take credit for this chart, but let's look back to the crash of 2008. And if you draw a trend line from the top of the crash of 2008 to the top of the dump in 2015, and that trend line is hitting right where we are right now. So definitely looking for a pullback and some healthy consolidation. Look at the RSI. The RSI right now on VIX is close to 2008 highs. And obviously in 2008, it was a monumental collapse that this does not even compare to. So again, that puts it into perspective. We are looking for some pullback. Even if we start strong tomorrow on VIX, we will be looking for some pullback. So UVXY, it's going to be the same thing. This is a 3 times leverage instrument that you can play. Closed yesterday 13 and closed today up at 23.59. So again, same thing. Extremely strong close, but we are overbought and we are looking for a pullback in the volatility index in the near term future. And UVXY, you can see because of time decay that this chart isn't doing nothing for the bulls. And that's because time decay has been wearing away at UVXY for years at this point. And there's a lot of traders that make a lot of money in terms of just having it a steady play in a bullish market. If you short UVXY on spikes, that's a good way to keep locking in capital and income. But that's where we're looking. So that's what I'm looking at tomorrow. Again, doesn't mean we can't start weak. Doesn't mean we can't see a flush first thing tomorrow morning. And it doesn't mean just go all in and hope. It means establish a support level. You can be more cautious and wait for the 5-minute time frame of SPY to give us higher lows and higher highs on the 5-minute time frame. And at no point during the dump did we see that happen. So let's look at SPY real quick on the 5-minute time frame. In the morning, we saw higher lows and higher highs. But once the bears really took over after filling that gap, it was all lower highs and lower lows. Every single bounce attempt was a lower high and lower low. And let's get it fitting here. So again, hourly RSI on SPY down at 11. We'll have to see where it opens tomorrow. But the risk to reward at this point absolutely favors the bulls. And we will look for opportunity tomorrow morning to enter bullish positions. NVDA, there's plenty of names out there, individual stock names that saw huge volatility. Again, there were flash crashes there. So Amazon dumped down. Look at Amazon, 13.20, and then 5-10 minutes later, 14.15. So a $90 bounce in 10 minutes on Amazon. And NVDA, another huge bounce as well. All out dump down to 205. 10 minutes later, we're up at 221. So that's like a 6% bounce in 10 minutes. Options going off the chain for NVDA and these names that saw this volatility. But again, the bid and the ask and the spreads on those options makes it a little bit trickier. If you're comfortable with them, absolutely, that's the way to go. But I am going to be in my happy place by trading common shares. So I will be looking to the leveraged ETFs, and I will be looking for the bulls. I appreciate you all watching. Hopefully not too many retirement accounts out there took some hits. Hopefully there was some hedging for protection, but there is going to be a whole lot of volatility and opportunity for the rest of this week for day trading or short-term swing trading. But again, too much risk, too much gambling for swing trading for me at this state with where the markets are at. So I appreciate you watching. We'll continue to check back in, and I hope you have a good rest of your night.